You're right, it's the numbers, but it depends on the stage of your company. If you're looking for early stage capital, you can have a financial model, but the investor is not really interested. They're interested in knowing what are the assumptions behind your model. Because what they're in the business of is not risk investment, it's managing risks. So they want to see what your assumptions are, and are those assumptions very risky or not? And then they're going to look at your team, because those assumptions, is there people in your team that can reduce that risk? Or is it the technology? What is it that's going to reduce that risk? And I think that's when they invest. Because if you're not a business, they're not going to have a meeting with you in the first place, because that's a given, because they're in the, venture capital is in the business of business. And so from my perspective, just make sure that your assumptions are outlined and you are trying to reduce their risk. And managing risk is very important from your startup's perspective. How do you deal with your investors when they're on the board? I do agree that you know the numbers, but you will always have your CFO or rent a CFO or whoever it is that they're in those meetings, and they run all the numbers when you need them to run it. You should know your burn. You should know which your points, your levers in your business are. And I think it's very important from that perspective that you know what that is. And it was interesting, and during the board meeting, my teams would always say that I don't act like an entrepreneur in the board meetings. I act like a VC, where I actually outline all the risks and what steps we're going to take to reduce those risks, or what the issues are, the red, green, and the yellow. That's what my dashboard and my board meeting would all be about. So they were always in there with me, knowing these are the things that's going to happen in the next month, 3 months, 6 months to a year.